I'm not teaching supply and demand. I don't believe in supply and demand unless we're talking about commodities, which are really directly linked to a real supply and demand factor because it's a real market. Not to say that you can't make money in this market. It's not a real market, not in the same sense that a bushel of wheat or gold, that's something real. Okay. The value of a stock index is not the same as something that you can eat. This could theoretically go to zero. Highly unlikely, but it theoretically could go to zero. Gold's not going to zero. Wheat's not going to zero. Cattle, beef prices, pork, crude oil, it's not going to zero. So there's real supply and demand factors with those markets. But when we look at markets like this, in many ways I view them as synthetic. They don't have the same measure of supply and demand, but it is manipulated and engineered. So the interest is always constantly manipulated. So what I do and what I teach my students to do is look for areas in markets where the manipulation is obvious or it's expected. And then we look for setups that repeat using phenomenon based on markets trading to liquidity, buy side liquidity, which is above a high or relative equal highs. That can be an entry to a new trade, or it could be a closing target for an existing trade. Don't think that it's that that is the only approach for your trade. It's a target only. No, I can use it as an entry too, as you'll learn this year as well.